And a wonderful good afternoon from Switzerland, from our side today. Thank you very much for joining us to this exciting roundtable, Venture Capital, from Angels to Funds. This afternoon, we're going to be speaking to our three panelists, XJ, Sophie, and Bea. XJ, might you please kindly kick off with introducing yourself?
I am very honored, first of all, to serve as the country chair for Angels Week in Switzerland. And I'm especially honored because it's our inaugural event. So this is the first time that Switzerland has hosted Angels Week. And we have worked very hard on getting great people, leaders, to speak at our roundtable. So a little bit background about myself. I was born in Taiwan, grew up in Michigan, went to school near Chicago, and then was a management consultant in Hong Kong. And then did my PhD at the University of Zurich. I've been living in Switzerland for 9 years. And then in 2016, I started angel investing. And now I've founded and run a startup called Venturepol. We build smart tools for venture investors. And the origin story is that I was angel investing in 2016. I asked my co-investors what tools were they using. Everyone said Excel spreadsheet. And I said, it's not very helpful for early stage angel investing. And that's how Venturepol was born. We built tools that we would want to use as investors. And then I fundraised for Angelpol and sat on the other side of the table as a founder and had personal experience with investor bias. And so it took me double the average meetings to raise a seed round, and I was only able to raise a quarter of the average seed round. And so it's become a personal mission of mine to help female founders fundraise and also diverse founders. So what we are doing is we are now launching a fund for startups building on Bitcoin, building for Bitcoin, and we will especially have priority for diverse founders who are building for Bitcoin. We will release this exciting news later this year.
Exciting. Thank you very much, XJ. Sophie, you're the next one on my screen.
Thank you very much. So I'm Sophie, I'm French and from Paris, lived in London and then now in Zurich for 10 years plus. I have been an angel investor since 2016, like you, XJ. My background is in finance, but not as a banker, more as a client, relationship, business development, marketing. I've launched my own company as well with my Dutch co-founder Caspar, and we have a sustainable angel investing platform. It's based in Switzerland, but covering Switzerland, Europe, and next step the world. I'm very happy to be here. Thank you very much for the invitation, because I believe and we believe in helping and supporting and sharing our knowledge, our network, our the people we know that they as entrepreneur, and we're here for that, and to give you as well some points in in this very interesting ecosystem where everybody can actually join. And this is all about the community.
Absolutely. So you say, Sophie, we really look forward to hearing more what you have.
If I may jump in here, this is why Sophie sits on this roundtable, and this is why Venturepol and Sophie's Alpine Angel Club are partners. We share our
definitely. We have the same values. What we want is really reaching out to as many people as possible on the entrepreneurs and investor side. And it's not a club for millionaires or people really financially super comfortable. It's everyone can get in and everyone can really make a difference. And that actually and support very valuable founders, and especially with my personal favorite of for decades now is empowering women on the founder side, but as well on the investor side. Sorry, Bea, I think it's your turn now.
No, happy to go. I'll start with when I'm 75, because then I'd like to retire and close the books on my commercial activities. And until then, between now and then, I hope to have raised probably about 3 venture funds. I would like to have a couple, big successes among those, but I'm also happy with small successes, honestly. Mm-hmm. And I would like to continue pursuing an idea I have about weather. And I'll talk to anyone who's willing to listen, because I'm just happy if it gets implemented either by myself or by someone else. I have a particular idea for how we could document weather, better than today's apps. Mm-hmm. And I'd like to get more engaged politically and also on boards. And what brings me here is a career spent in IT. I studied computer science at Cal in Berkeley from 1986 until 1990, and then worked in the field for 5 years for UBS, got my MBA, worked for McKinsey for 5 years. And since then, since about 2001, I've been an entrepreneur and have been developing products, about 5 to 7 so far. And I look forward to sharing ideas with you guys about how to invest.
And if you guys are in good for the audience, you're in good company today, because if you heard, Bea is a very ambitious GP. Goal is 3 funds, and I imagine they're going to be big.
Definitely. So let's kick off the roundtable. What I want to hear from you guys first is your investment theses. What's the philosophy? What methodologies? What you look for when you're about to invest? Sophie, would you like to go first?
Well, yes, of course. Well, at Alpine, we have 3 pillars, for example. So that helps funnel down really to what we want to invest in. Technology, okay, easy one. UNSDG, less easy, surprisingly a lot less easy. And diversity. And diversity is obviously you have facts, but you have as well a mentality. It's a mentality to see how you can be diverse. And as I said, I like to say, we're not going to penalize male friends to start a company as long as they are the right, diversity mindset. This is actually then, when you tick all those boxes, you don't have that much left, to be really honest. And after that, what you need really to look at, as we said a bit earlier in the conversation, off record, I think, it's a team. The team makes it happen. You can have the best product in the world, the best, financials, market, everything. But if the team is not on the same foot, in the same page, it's not going to happen. And the other thing we look at, because we're not in the philanthropy business, I have to say, and not myself either, it's the scalability. You need the team, you need to check if they think big or big enough. It's better to reduce, to slow down, reduce, regroup, than actually to think too small and to try to make it bigger. That doesn't work that way. It's like cooking. When you half or you double, the cake is not the same.
Would you agree with that, Bea?
My thoughts were triggered by that, about some small and modest business plans that I have seen that were enough for me to invest. And so I think you always have the question of which investor requires what kind of time, time series. You always have the time series when you look around where it's this big hockey stick, right? And when I see gigantic hockey sticks, I ask myself the question, which investor that they're trying to recruit as an investor actually asked them to do that? And maybe it was you, Sophie, because I don't ask them to do that. I am very disinterested in these hockey sticks. And while they may turn out that way, it's maybe 1 in 10 that turns out that way. So I prefer to focus on a proprietary advantage. I would never have started the tool without the peer-to-peer protocol that founded it. I would never have founded Laburo without already having done the tool, because it's both in the media business. There's a few advantages to that. Likewise with Genistat, which is a data science firm. We're doing, official TV data measurements. We got our jumpstart building data science for the tool. And now with Fanfare, which is a blogging startup that does video feature analysis. So you can submit them a quick chat, let's say the Zoom chat, and it'll extract the key moments, for snackable content for sharing on social media and so on. So that this is all related. That's the proprietary advantage. And second, I look for any sort of gating. The tool was gated first technologically, but we broke through that. Then it was gated by the question, do we get content? And we broke through that. Then it's gated by the question, do end users actually enjoy watching TV? It's such an old thing, isn't it? It turns out, yeah, they actually do enjoy it. And then the third, big gate is, can we actually commercialize it? Do we find a way to pay for this? So I think as you take a product to market, if you are gated, like as in an earlier startup of mine, by IBM being your fantastic partner who's going to bring you the data center automation company that I, co-created. If they're your means for getting to customers, then you're screwed, because IBM has a completely asymmetric relationship to you. For them, they're betting, that much of their reputation, but for you, it's all of your reputation and your entire existence, right? And so IBM always wants to be cool and offer their customers a bit more than the normal IBM toolkit. So you're just helping them to be cool. So whenever I see any sort of go-to-market that is not only relying on something like that, but even worse, touting, in big letters saying, our partners IBM, that's a complete no-go.
That is such a gold nugget for all founders watching this. And it's especially valuable because I met Bea. We both sat on the jury at the digital entrepreneurship competition at the University of Zurich. And Bea always had the best questions for founders. And I think this is because she is a founder. She's built this, she's very familiar with the rodeo show, and she can instantly spot what needs to be improved, what's the biggest weakness, what's the biggest strength, where she just demonstrated just now. So that's for go-to-market strategy for founders. And sales cycles are really long if you go for big corporations. And there you go, that's wisdom right there. For our fund, Venturable is, again, launching a fund early next year. For our first fund, we are serving startups who are building for Bitcoin or startups who are building on the Stacks protocol, which is also for Bitcoin. We see human needs being addressed by cryptocurrency, and Bitcoin, in our opinion, also in my opinion, is still royal. Bitcoin has a royal status. No cryptocurrency will replace it. It will always be the benchmark. But we have we have this $10 billion value for Bitcoin, but we don't have enough apps built for Bitcoin, and we see a tremendous opportunity there. And then, so that's one. This is this is what our focus on the technology on the sector. Two, we will give priority to diverse founders, women, non-white, LGBTQ, older founders, disabled founders. We especially love you.
Thank you for sharing that, XJ. It's so very inspirational. I really look forward to seeing how this fund takes off next year. Before Bear went into it already, and this is a question I was really looking forward to hearing from you guys. When it comes to investments and when it comes to investing, what for you guys are deal breakers? And Bear already mentioned it, the big IBM sign. But what about you, Sophie and XJ? I'd love to hear from you. What are the deal breakers when it comes to investing for you guys?
I have to say, for example, if they come straight away with, can you sign an NDA? And yeah, we had that a few times. And this is, for some, I would understand when there's really a high technology, but then it's only useful when you start doing a due diligence, really asking, deep down question on technology. You have to tell them, your own proprietary and, the technology software, what it is. And then eventually I can, but that's us, twice. And it was a good company, but they asked us to sign an NDA right away. And they said, we can't ask our angels, to the members, to all of them to sign an NDA before even, meeting you. So that's definitely a deal breaker. And obviously, even before the first call, when we do a triage, when the conversation and just getting some financial answers, it's very difficult. I'll come back to the team, and it's exactly what you said, Yasmin. The people behind the products is very important, and you need to have that good fit. So if it's the communication is already a bit difficult, it's just it's not a very good start. I would say there, those two.
Oh, great input. Thank you, Sophie. XJ, what about you?
Yeah. And there's another gold nugget from Sophie, a tip from an investor. If you don't know this already yet, we're not going to sign NDA, especially not on our we're sorry, like that's not going to happen. And we'll tell you why. Because we talk to so many companies and founders, and we cannot be legally liable for that, right? And we always talk to our co-investors. We have investor friends, and so no, like NDAs, no. And then so thank you, Sophie, for that.
Yes.
Super valuable. Personally, as an angel, I don't invest in all white men teams, founder teams. If I see all white men, I will ask, why are you all white men? And if the answer I get is, well, we tried,
yes,
we tried, but we just couldn't find a suitable, diverse person, then I won't invest until I see more effort put into diversity. Because I can tell you, ROI, I see more. We see stats. We see constantly. We see ROI equals to DEI. You want to make returns, you must have diversity, equity, inclusion, because your customers are most likely going to be diverse too. The people you're serving are not going to be all white and all men. So that's me personally. Now, this personal deal breaker is personal because for the fund, which is a Web3 Bitcoin fund, we very, very unfortunately don't see enough women. We don't see enough women in crypto, in Web3 yet. But I have to say that the women that we do see, especially artists minting NFTs or engineers building cool stuff, I love them. But are we going to be investing in all white men, all white crypto bros? Probably, yes. So here you can see I have a different, it's different here.
You mentioned it's about the people, right? You said it's about the people, that the human capital behind that is such an important thing when it comes to where you invest. But the question actually also is, it's not just about who you invest in or which company, but who you invest with. Who do you co-invest with? Is this also something that's really interesting or important for you guys? I've just knocked my computer. Bea, do you look to see who's also investing in the same venture capitals that you invest in?
Again, the answer changes over time, and it changes for what purpose. I have co-invested in a venture where Kleiner Perkins was invested. I thought, wow. However, that was a dud. It was an angel investment. I lost 150K. Then I invested in another venture where the founder was the former assistant of Marissa Mayer from Google. Was a dud, lost 50K. Then I invested in a venture where the founder was a serial entrepreneur, had successfully exited before. That was a trade sale, but then it was a trade sale to a startup from Qualcomm that actually a McKinsey friend of mine was leading, and it failed. And I think that about sums up my losses in the venture space so far. Fortunately, all of my European investments have been successful, and none of them were particularly gold-plated. There was nothing, famous about them. Zatu was done with family offices. The three other firms I mentioned, I'm doing them myself. I may eventually involve VCs. It really depends, So I don't name shop, I don't name drop. I really look for passion. And if I may add something about your bias for fringe groups and so far disadvantaged groups, XJ, I think I find it commendable that you really rally for these people, give them an unfair advantage. If they come to you, they'll be actually treated better, I assume. And I think that restores an element of fairness and balance. I do, however, think that you may want to pursue another aspect of this in particular, which is the tenacity and sort of MacGyver-like scrappiness that I look for in a founder. If someone's disabled or marginalized, it turns out they are often hardy. They did not have an easy life. Not everything was served on a silver platter. Their parents did not write their high school thesis and such kind of nonsense, right? Which is actually pretty widespread in Switzerland and especially in the US. So there's their experience was more self-reliant, more make do than can do, and but in a good way. And I think I look forward to reading then about the returns from your fund, because I can imagine that there's a positive correlation between people who've had hardships who then also perform really well in their entrepreneurial path. And why? Because of what I said. And I think additionally, I'd like to say that a startup is a learning machine. I think few people understand this. A large company is not a learning machine. A large company really knows how to make, I don't know, glass thin, or how to make bits fly fast, right? Whatever it is that they do. A startup doesn't. They think they do, but they don't. So then they learn, they adapt. And I think a person who's disadvantaged, has been pushed to the fringes, has gone through a life of having to continuously relearn, readapt. They're basically a foreigner in any environment, even in their own country. They're a foreigner because they're handicapped or they have a different color. So I think this kind of constant learning may also be a good foundation for a startup.
I like that point, Bea. I have to say, I never thought about that, but within diversity, you have, yes, those people had to learn and adapt and try and fail and win and do it again. Yeah, thanks for that point. It's a very nice. Yeah.
I can listen to Bea for hours. I kid you not. She is like this trove of this treasure trove. And so what we just heard, let me sum it up for you guys. Her learning as an investor is that pedigree does not guarantee success, does not guarantee returns, and
no.
And I must say, she is an outlier in this. Investors I talk to in Silicon Valley, everyone is talking to Stanford alumni, ex-Apple, ex-Google, right? So everyone's looking at the same 10 deals. And then valuation gets pumped up. But then people who don't have these pedigree, but who are really solving human needs, you don't even get to meet investors, right? You're not in the network. You don't have access to the investor networks. But Bea has proven that when you take a different approach and you look at the person, not just papers, degrees, this is where you find the gems. And then for diversity, again, I have high admiration for Bea, and also there is a special connection here because both Bea and I are openly out. We're both in the LGBTQ community, and if I may say so, for both of us, we're proud that we are in this community. And so we both know what it is like to be outliers, to be unique, to be different in a world that encourages conformity. and we know what it is like to personally be brave and say, we're different, we're going to take the path less traveled, and we are unapologetically going to go on this path and just find ways to get where we want to go. And again, it's tenacity, it is grit, but also it is smarts, book smart, street smart. You know, we find ways to, you know, for example, what Bea just said, you need to always validate what you're doing, right? So she talked about the gates or the moats for Zatu, which is a very successful company she's built. And I think that's also a very valuable lesson there.
Thank you very much, XJ, for that excellent summary. What I'm taking away is your last 3 points: from angels to funds. It takes tenacity, grit, street smart, and an awful lot of human capital. This has been the main message. Panelists, Bea, Sophie, XJ, thank you ever so much. I could have really gone on for hours listening to you guys, and I really hope to meet you all personally for a cup of coffee or a drink soon. Thank you very much for joining us.